Well, good morning, everyone. Let's get rid of that. There we go. Morning, folks. How are things? Good to see you on this morning. Wasn't here yesterday. I had a weekend down in Melbourne with some pretty cool, crazy cats. A bunch of business owners, about 50 business owners who were doing some things to increase their business wealth. Business owners and wealth are a little bit different to, let's say, some of us on the career path or PAYG. So we did a little course program on the weekend. I was there with Deb and Andy Fenton and a few of the crew from PRE. So that was fun. That's why I wasn't on yesterday, but today I'm here. Good morning, Tim. Morning, Tim. Morning, David. We've got Luke. Yeah, the big call, huh? Interest rates up 0.25% today. Question mark. Who thinks? Who knows? I'm going to go. I think they're going to give it another nudge, Tim. I think they're going to give it another nudge. Well, we shall see, folks. We shall see. But it's interesting. Hey, morning, Jeff. There you are. Deb, David, howdy. Well, it's interesting. It's part of Shannon. Morning, mate. Good to see you. I think that it's quite a poignant time to have a conversation about what is going on. So for many of us, for some of us anyway, me, well, maybe you too, we were quite chuffed that interest rates paused a few months ago. The interest rate rises anyway. Paused for a couple of months, which was fabulous. And then a month later or a couple of months later, they gave it another nudge, a bit of a 0.25 up. What were, tell me in the chat, team. Ups from Jeff as well. Morning, Steve. Morning, Angela. So even though we had a pause, everyone had a sort of, a bit of a breather, and then they popped up the interest rates again. What actually happened, folks? Tell me in the chat, what actually happened to the house prices? What happened? What? Morning, Andrew. Tell me. We had a bit of a pause. Things were chilling. They put the interest rate up. Inflation's still a little bit high. Yeah, it's an interesting one, isn't it, Tim? The inflation things aren't about spending, So yeah. So what happened? They put the interest rates up, and by and large, the house price slightly rose. What's going on there? What's the go? And not everything is as it seems, folks. Not everything is as it seems. So let's go on. That's what I wanted to talk about today. What is doing that stuff? Because if we have a look right here, if we have a look at our trusty little chart, folks, you guys know this one, SQM Research. I like it. Asking prices. So this is like literally weekly reporting on the asking price of property listings, right? So asking prices, David, exactly. Asking prices are the leading indicator, folks, of what will happen with eventually values and market prices, right? So if you have a look here, and this is kind of the all, right? It sort of paused for a sec, and then it went up, folks. It went up, and ever so slightly. Again, kicked up a little, and all of the what do you call them? The data providers are kicking in and saying, hey, let's have a look at, interest rates not really affecting the rolling change on a month. Look at this. Combined houses, 1.7. Combined apartments, 1.1. Rolling monthly change, rolling quarterly change, rolling 12-month change. What is going on, folks? Why? Well, we know a few reasons why, don't we? Many of us know that there's some very interesting facts going on out there in the marketplace. Some things that let's do this. Here's a question on the weekend from the old Fin Review. Why are house prices sending false signals? What's going on? Well, let's go through some of the reasons we know, folks, that house prices and also rents are going up, right? What's the number one driver, folks, in this game that we're in, this wealth creation process that we're using real estate? What's the number one driver? Where supply and demand. Supply is down. Demand is kind of staying the same, or if we include the population increase that just happened, demand is massive. Supply down. The worst construction supply that we have seen in over a decade, folks, and it's like hideous. A decade ago, our population was 4 million people less or 2 million people less. Anyway, we talk about this, right? So supply is down, demand is up. We've got population massively through the roof. When it comes to this sort of stuff, jobs, people are employed. And matter of fact, we've had some slight increases in income as we've seen around the traps, which probably could be adding to some of this inflationary issues and pressure. But why? After 12 consecutive interest rate rises, interest rates are kind of gone from 2% to kind of 6%, a 4% interest rate rise. Our house prices going up. What's going on? All right, let's talk about this because we've done enough setting the scene. We've got some underlying facts that aren't going to go away. You guys know this. Supply and demand and population are here to stay, driving these things. And you guys know we've talked about this ad nauseum. But I want to dive into a bit of the detail today. Maybe I need a bit of extra coffee for this one. When we talk about, folks, the house price, the house prices going up, the median house price compared to the average house price, when we're looking at this stuff, what's the difference? And I've always asked this sort of thing, the median house price, right? Stick with me on this if it becomes too hard. But anyway, let's have a look at this. I'm going to scroll that, make that a bit bigger, make sure we can all see it online. There we go. Right, the median. Oh, who's getting sick? Right, the median, exact middle of a list of values, the exact middle of the list of values, and then the average, the sum of the values divided by the number of values. Now, the exact middle. Look, see, the exact middle. So what's actually happening, folks? What's happening is the middle is moving. All right, okay. Does everyone understand what I just said there? The middle of the house prices is moving. And if we drill into what's going on, I've got some data here. I want to show you this little graph here. All right. what moves the needle a long way in this middle house prices moving? Tell me, what do you guys think? So how does the middle move? What, let's say, part of the market is going gangbusters right now? What part of the market is going absolutely gangbusters right now, folks, and moving the needle? Tell me. And there's three parts of the market, right? There's the bottom end of the market, there's the middle, and then there's the top end of the market. You guys tell me, folks. Tell me which one of those parts of the market aren't affected by as much this interest rate issue. Anybody know? All right, maybe down here. The top end, folks. Yep. Yeah, exactly. Yep. All right, we've got the top end. Dead right. Top end, more expensive properties, luxury apartments, check that out, right? I did a bit of this the other day. Maybe I'll quickly just find this, actually. Quickly show you guys. Out there in the world of expensive stuff. Let me have a sticky beak here. We've got prices, record prices, like getting sorted everywhere. I can't find that one for you now, unfortunately, but we'll go back to this one. So what happens when markets move, or markets that move the furthest in statistics or in the house price? The distance luxury stuff can travel is further, and obviously further down. But what is moving the middle is the top end of town, folks, the luxury end of town, those who are not affected by interest rates. They don't really care, okay? So these properties, these places are being purchased, without credit or the care about credit. For us in the world of investing, if we've got exposure to those three sections, let's have a look at this here. So the bottom section, let's call it the bottom, the middle, and the top. What is the bottom most susceptible to, team? What dictates the bottom prices of the bottom of the market? What's the most susceptible thing down here, folks? And that is the cost of mortgages, right? The interest rate, right? Okay, the interest rate. Let's move that up here as well. Interest rate, right? The interest rate there. So at the bottom end of the market, the interest rate. But what's the major thing that constrains the bottom end of the market is the ability for this part of the market to generate income, right? So they will always have less income, and by and large be affected by that income issue, right? At the top, they're not affected by interest rates. They don't care. They often buy in cash. The loan to value ratio on the top end of the market is a lot less. What at the bottom end of the market? Tell me in the chat. Yep, lending. Tell me in the chat. What do they have? Large deposits at the bottom end of the market? Tell me. What is the loan to value ratio often at the bottom end of the market when someone's trying to get into real estate or purchasing at the bottom? The loan to value ratios are high often. Let me do this. 90%. They're paying, lenders' mortgage insurance, and yet 95% sometimes as well, right? So this part of the market often is exposed and has an issue, right? So this part of the market has higher risk often when it comes to lending and the effect that it does. Now, the middle part of the market, and we know this is kind of middle income. This is the the majority, let's say, of the market in here. The middle income, often they'll aim for 80% loan to value ratios. They'll avoid paying LMI. There'll be sort of two incomes, white collar, et cetera, or high earner. And that part of the market is less affected by these things. And what can they do? What happens to the middle part of the market, folks, when they're affected by, let's say, interest rates? Well, this is exactly what happens. I've seen it 1,000 times. I've done 1,000 loans. They cut out the Netflix. They cut out discretionary spending. They get rid of all of those things and they just tighten the belt, right? There's nothing to cut down here. There's nothing to cut at the bottom. They cut out the discretionary spending and they hunker down, right? At the top end of the market, where they're not using credit or any of that sort of stuff, cash, they might use a 50% loan to value ratio. I've seen, and I've seen plenty of buyers just come in and buy with cash. I don't need a debt on this thing, right? They want the property. They want it, right? They want it. It's not, this is all I can afford. If there's some competition or someone else is with, they're competing with, they'll just pay more. They want it, okay? And, they're not worried about debt. Debt is not an issue when it comes to this part of the market. So a long way around saying, folks, that this part of the market is very alive and well at the moment, driving in this luxury opportunity, this high quality stuff. All right. How can we take advantage of it as property investors? Well, I reckon there's an opportunity. Well, I know there's an opportunity in this upper part of the middle. Upper part of the middle is where we can buy good quality properties. What does Sam call it, folks? Sam calls it flight to quality. So flight to quality property, a flight to F2Q, flight to quality properties. That part becomes that, discretionary wanting that piece of real estate as we go forward as an investor. Anyway, there you go. Thought I would talk about that today. Might have gone a little bit deep into the mechanics and the details of what we are thinking about. But the bottom end, the bottom end sometimes in some of these charts seems a little less volatile, but it certainly has less capacity, less growth capacity often when it comes to values of real estate as well. So that upper to middle to upper is kind of the sweet spot for growth and luxury and the things we're talking about. It's this spot right here. It's that spot right there, folks, when we're talking about the type of quality of property we're up to. Anyway, there you go. Feel like I've still lost my voice. I've been talking all weekend. Got through this one today. But listen, folks, that's it from me. Wealth Coffee Chat done and dusted. We'll do it again tomorrow. Why not? Why not? Let's do it again tomorrow. If you're up for it, let's do it again tomorrow. As always, let me know in the chat if there's something that you think we might chat about. Tomorrow we'll be probably talking about the interest rates, I'm sure. There might be something else, but let me know. Thanks for joining me today, folks. Great to see you here. Good to be back on the Wealth Coffee Chats. But that's about it. That's about it. Why is the property market moving? Well, there's supply issues. We know that. But people with money, there's lots of them out there buying in the middle to upper and moving that needle, moving that median price as we roll along. So, all right, team, that's it. I'm done. I'm dusted. You guys be awesome. Be well. See you tomorrow for another one. Bye-bye.